Hello, my name is Michael Lennon, and welcome to another installment in our educational series. Our goal here is to educate our customers about investment terms, investment products, and today I'm going to talk about managed funds. Essentially, what are managed funds and how they work, and give you an insight into how they can be used to help you achieve your investment goals. Well, first of all, what is a managed fund? Basically, it's a pool of money invested by many people who have similar investment goals that's managed by a professional money manager. It generally has a stated investment goal to achieve 2% above inflation. It could be, there are many types of managed funds. There's single asset funds that invest, say, in Australian shares or invest in international shares. There's multi-asset funds that have a range of assets, being cash, shares, property, fixed interest. There's also multi-manager funds that have different specialty managers managing different parts. And managed funds are basically available for superannuation. Most Australians would have exposure to managed funds through their superannuation fund. They're also available as pension funds or investment funds. Now, there's some key benefits to investing in managed funds. I guess the key is diversification. You're able to get a diversified portfolio covering a range of investments for a small amount of money. You have a professional money manager managing your money. That's their full-time job, so you have professionals looking after it for a fee. They can be fairly simple in the sense that they're convenient and efficient. Instead of all the paperwork of managing a portfolio of direct shares, you get convenience, a single statement, a single tax statement each year, and the efficiency of institutional economies of scale buying shares at lower prices. Now, as I mentioned, you can start with a small amount of money. In many cases, you can start with as little as $1,500 and $100 a month as a regular investment. And one of the things you look at is time. For many people, trying to run a direct share portfolio takes a lot of time. To have adequate diversification for direct shares, you need 15 to 20 different share positions. So managed funds are often very effective. Now, I guess I'm often asked, how do managed funds work? Well, effectively, you put your money, invest your money in a managed fund, you're issued units in that fund. Each day, the fund adds up all the assets it owns and subtracts any liabilities like management fees and determines the unit price. So as the market rises and falls, the value of your unit rises and falls. Any income that's collected by the trust is distributed each year to investors. Now, how do you go about choosing a managed fund? Well, I guess the things you need to look at is you need to do some research. Now, at 2020 Direct Invest, we provide access to research from Standard & Poor's, which is a qualitative and quantitative research tool, and Morningstar, which runs purely a quantitative research. Those ratings and fund profiles are available in the Find a Fund tool. So I encourage you, go to the Managed Fund or Superannuation section, look at our Find a Fund tool, and it allows you to search through the database on a range of, different options, type of fund, fees, expenses, etc., and then filter down to find a fund that suits your needs. Now, one of the key things I want to point out about managed funds, and they often get a bad name because of the entry fees and commissions and advisor fees. Well, first of all, avoid entry fees. These fees are optional. Through 2020, you can buy virtually any managed fund without paying the entry fee. We rebate 100% of those entry fees. And you need to consider the effects of the management fees and some of these unnecessary advisor service fees over time. In fact, over a lifetime in your superannuation fund, excess fees or these unnecessary fees can actually add up to hundreds of thousands of dollars. Less money for you in retirement, more money for your plan. So those of you who have seen me talk before, the golden rule of investment is when you need advice, and very often advice is of a technical nature, pay an advisor a professional dollar-based hourly fee and execute your own transactions. That way you have control over your investments in your future. Now, once again, if you're not registered on our website, I encourage you to register. Use our Find a Fund tool and set up. We also have a My Portfolio tool, so you can set up either a phantom portfolio or follow your actual portfolio on a regular basis. And if you ever have any questions, we're very proud to have a professional and knowledgeable staff. So feel free to give me a call or my staff a call, and we'll happy to answer your questions and help you become a better investor. Thank you.